The Bangko Sentral ng Pilipinas kept the cost of borrowing steady today, the first pause since hiking rates in May of last year. The key interest rate remains at 6.25% after the slower increase in prices of goods, with inflation cooling for the third straight month in April. Banks and lending companies use the central bank rates as a benchmark for loan, credit card, and deposit rates. Let's now get the thoughts of Oxford Economics Assistant Economist Makoto Tsuchiya, joining us now from Tokyo. Tsuchiya-san, thank you so much for joining us on The Final Word. Is this a good move for the Philippine Central Bank to keep interest rates on hold?
Right. So I think there's one of the main reasons behind such a pause is the inflation coming down, which came down to 6.6% in April. Now, this is still above the 2 to 4% target of the BSP, but inflation is coming down, which gave the BSP some comfort in pausing. And this is going to be a positive for domestic growth.
For how long, Tsuchiya-san, do you expect the central bank to keep interest rates at these levels?
Right. So we expect the BSP to keep the rate at 6.25% for the rest of the year before starting to cut rate in the first quarter of 2024.
But if we continue to see a downward trend in the inflation rate, in the month of April it was at 6.6%, don't you think that the Bangko Sentral should cut interest rates sooner rather than later to at least boost the economy through additional liquidity with a reduction in the cost of borrowing?
Right. So that's a good point. So inflation is only one aspect of the economy that the BSP looks at. And the another aspect is exchange rate, which is very important because the US Fed is still hiking. And actually, the first quarter of 2024 is when our US team expects the US Fed to start cutting rates. So I think the BSP is going to move in lockstep with the US Fed to start cutting rates in the first quarter of next year.
All right. So expect a rate reduction only in the first quarter of 2024. But could there be other problems on the horizon, Tsuchiya-san, that could impact inflation for the remainder of the year? I mean, right now we have power outages, we have water shortages, and then the expected El Nino problems in July, August, and September. If all of these come together, could we see inflation rising again from the current rate of 6.6%?
Right. So I think the risks to inflation, like you said, are definitely tilted to the upside, given the weather-related disturbances. And if inflation does actually increase, then yes, I think there's a risk that BSP is forced to tighten monetary policy.
And if that is the case, putting all these risks together, will we likely see lower growth targets for the Philippine economy in the second quarter, third quarter, and fourth quarter, which, of course, came in as a big surprise at 6.4% from the January to March period?
Right. Yes, I think it's possible that the growth is going to fall short of the government target, especially if you think about that the monetary policy actually comes with a lag. So the past year or so, we have seen 425 basis points hike from the BSP, and the full effect of that is going to kick in this year. So I think it's really a real possibility that the growth target is not going to be met this year.
So if it won't be met this year in 2023, what is the growth outlook of Oxford Economics for the Philippine economy in 2023?
Right. So I think the Philippines economy is facing several headwinds. So the first is, as I said, the lagged effect of monetary policy is going to weigh on domestic demand, including private consumption and business investment through higher interest rates. And on the external front, we actually expect the global economy to slow further for the rest of the year, which is going to weigh on the Philippines' goods exports. So the picture is not looking great for the Philippines.
And will the rest of Southeast Asia also experience what the Philippines will go through in terms of risk assessments for 2023?
Right. Yes, I would definitely say so because the monetary tightening is almost universal in the world. So that's going to also play a role in other economies. And also, the global economy is slowing, and that's also going to weigh on every country in the region.
All right, we're taking a look at the negatives for the Philippine economy. But what are the positives that you see on the horizon, Tsuchiya-san?
Right. So the positive is that for the past 3 quarters, the GDP has been performing relatively well compared to the consensus expectation. So maybe the domestic demand is, holding up relatively well compared to what people think. So if domestic demand if private consumption is going to prove more resilient than expected, then that can be an upshot to the economy.
But domestic demand has always been underpinning the growth of the Philippine economy for many decades. What about exports? Are we likely to see an increase in exports?
Right. So export, like I said, global economy is slowing. And I guess for the Philippines, what's also important is the downturn that we are seeing in the IT cycle. Because the electronics products, including semiconductor, is such a large part of the Philippines export, we are unlikely to see a huge growth on the export front.
All right. Thank you so much for your insights on the Philippine economy. Makoto Tsuchiya from Oxford Economics joining us from Tokyo, Japan.